Hello guys, what's up? So today I will be explaining to you this trading strategy. I told you I will be explaining how I use it, okay? So first thing, I have three graphs. Now each one is for a different set of pairs depending on where mostly they get their news and they start moving. So for the Asian session, I have mostly things related to AUD, New Zealand, and yen. And then for the London session, I have things related mostly to GBP, Euro, and Swiss. And for the US session, I have things mostly related to things that can move during the US session, okay? Now, I will be explaining one of the setups of this indicator. So I will take, for example, the London session, and I will take some examples of different pairs. Okay, let's start with the GBP CAD, so it's open anyway. So I would be looking for the first signal after the session will start. So let's say, for example, this session. We knew that there were some news at this time because they were like some important news at this time for the GBP. And what I will do, since there are some important news, I will be waiting for these news. Now, my levels for trading this strategy will be the boxes that you see here. These will give me the entries and the stop losses and the targets. So how do I go about doing it? Whenever I have a white line like this one and a red box, this means that the market has finished doing some kind of a contraction, and now it should start doing some kind of an expansion. Now, because we finished a contraction and we are starting to go into an expansion, we would expect a strong move. Now, in strong moves, we expect that the market will go in a certain direction and achieve certain levels where it will not look back. So we will be able to move our stop loss to break even at these levels, and then it will be a risk-free trade and we will let it run to target. So in this case here, for example, now as you can see, when the market gave us the news, there was here a liquidity, and this pushed the market. So here, this was the entry. The stop loss would be the yellow line in this case because there were news, and the target would be the 3-to-1 risk to reward ratio, which is 400%. Now, whenever the market will reach the 210% level, I will be moving my stop loss from this level to the break even. Okay, so this would be a risk-free trade. So this is one of the setups I use. Now, another setup I use is whenever I have different white lines like this one, and I see that the market is breaking down from these levels. So this will give me some kind of a indication that the market is going to move in the direction away from these lines, from this zone. So as you can see here, it went down and it went down and away. So a trade based on this would be having of course, once we have like a big candle like this, our entry will always be the liquidity line, which is this one. Our stop loss will be the white line, which is this one. And as you can see, it achieved the 400% target. Now, it took some time. It took like 1 day to achieve the target, but we were able to move our stop loss to break even in the same day. So this is another setup. Now, a third setup that I also watch for is based on the gray boxes, like in this case. So whenever I have a gray box like this, and I see that the market has closed a candle like this one, what I will do, I will have my entry at the close of the candle, and my stop loss, initial stop loss, will be at the beginning of this candle at the open. Now, as usual, when the market closes at the 210% above, touches it, I will just move my stop loss to break even. Now, I will always wait for the 30-minute candle to close to do this, because sometimes inside this candle it can go up and then go down, and so I don't want to confuse myself. These are 30-minute candles, so we have time. I don't need to rush. So this is how I do the system. So if you need like a private session to understand exactly how the system works and where you can get it from and all these things, you can contact me in the contacts in the description below. Okay, this is an excellent system. It makes very good results. Now I will just show you when I mix this system with the asymmetric compounding that I told you about, what is possible. So as you can see here, let's say, for example, you started with a $1,000 account, and we take 5% risk for every trade at the beginning, and then the next trade we would use the profits from the first trade if it's a winner, and then we will risk also we will add 5% to it. So let's say, for example, in the first trade we were risking 5%, we made 3 times, so we made 15%. So on the next trade we will be able to risk the 15% from the first trade, and we will be also able to risk another 5% from the initial capital. So we will be able to risk 20%. So when we risk 20%, if we win, we will win 60%. Using this strategy and just making 66% win rate on 45 trades, we were able to grow this $1,000 into 1.2 million in 45 trades with a 66% winning rate. And the maximum drawdown on this scenario was 20%. Now, even if we don't achieve the full of this result, even if we achieve 10% of this result, we are still doing 100 and something thousand. So this is a very good strategy when coupled with this asymmetric compounding method. Okay, so any help you need, just contact me in the description below. Have a nice day. Bye.